Welcome back, folks. All right, so if you're wondering where I've been, obviously I'm human, I'm not AI. So I have been married to a lovely woman since 2001, and we are celebrating our 24th anniversary together tomorrow on Valentine's Day. So we are sharing time with one another, and I've not been able to spend much time with the charts, but today I felt we were going to likely draw up into some buy side. And I want to remind you all that I covered this in video, and I've covered it inside of obviously the Telegram channel. I mentioned in the Shotgun Saturday last week, I believe it was, um, we were in this large consolidation on the daily chart for NQ. And I mentioned that I didn't believe we were done yet, and this would be a draw on liquidity. These highs here, December 26th of 2024, and the high at January 22nd, 2025. So right above that would be buy side liquidity. And we saw how price, not easily, not one shot, but eventually gravitated towards that level here. Okay. So we worked inside of this inefficiency for a little while between here and here. And I handled that as a volume imbalance. And you can see all of that business being supported there and eventually pumping it up into here. Now, the remaining portion of sell side imbalance, buy side inefficiency is in this area between this candle's high and that candle's low. So your chart would have this area annotated right there. Okay, so that's what you'd be looking for. So that's the only portion above these relative equal highs that's inefficient. And then we have the old high here. Okay, so I believe that it's possible that we'll eventually make a new all-time high, but we're just going to be content with this for 1 week. I'm certainly content. So let's go over to the lower time frames, and I'll show you what I did today. And some of you are actually going to be angry. I can already anticipate this. You're like, why didn't you share this with us in the Telegram channel? Well, frankly, I am on my personal time. And while my wife has her little coffee breaks and whatnot from whatever we're doing for that day, I take the liberty of just going in and doing what I want to do. And when her time ends with her personal schedule where she wants to now go out and about, I have to go and accompany her as her husband after we're together, right? So this morning I had the opportunity to do that, and I will now show you those executions with everything in line with what I gave you as a draw on liquidity and where we were likely to go in NQ. So take a look at it now. All right, folks. So we're looking at a long entry in here. I'm going to be placing my stop loss right below the most recent 1 minute candlestick low. So I believe this is a pair of inerrant wicks. So in other words, this is trading outside of the 6:45 minute Wednesday Asian session buy side and balance sell side efficiency. That's what that little upper blue box is. And the stop loss is very, very tight. I'm adding more to it there because I don't believe we're going to go any lower. So these are basically like mohawks, I call it, when it just colors outside the lines. And I'm expecting price to run up to that minor buy side liquidity, those relative equal highs, and then gravitate towards the 21,698 level. The first percentage fair value gap that's being shown here, that is the first inefficiency after the PPI, producer price index number. So I'm framing that as a point of interest for me to pay attention to. Should I get stopped out, I might have to use that information to re-enter if I choose to do so. I'll keep adding and building position here using the low, that 6:45 minute Asian session from Wednesday. And I want to see price really try to make an attempt to get above the 21,880 level. I'm speeding the video up, by the way. It's the total time of recording for the trade executions you're going to witness was a little over 1 hour. So I've condensed it down to a quarter of that amount of time, essentially. Thereabouts. Okay, so I want to see it leave that lower half of that inefficiency that's shown here and gravitate towards the upper half and not return back down the lower half. That would be ideal. Our optimal trade levels would be the run to minor buy side liquidity. I don't want to build anything larger than 15 contracts, just as a means of illustrating what many of you have available to you when you're trading these prop accounts. That's reasonable for it to come up to the top of that inefficiency and then come right back down to consequent encroachment. I don't want to see it trade to the outside lower edge of that blue shaded inefficiency that we're in right now. Again, at the sake of sounding repetitive and annoying, it's based on 5-minute chart for NQ for Wednesday's Asian session at 6:40. Include the volume imbalances and you'll see what I'm showing you here. If I hadn't already accumulated the 15 contracts position that I have now, I'd be looking to add one there, right there. All that is coloring outside the lines. There's no reason for me to be worried. I'm going to extend that out so you can track how it respects with the bodies inside that range, but the wicks are allowed to do the damage, and my stop loss is below. If I hadn't taken a long earlier, when I said I would have, this is also where I would actually enter along. It's a wonderful area to be going long on. And I would use that wick in the previous candle low. One tick below that, that would be my stop loss. And it still would be fine right there. Looks scary, doesn't it? Looks scary, but isn't scary. All right, that's what I'm looking for. That type of indication that it wants to break above, that take in consideration that minor buy side liquidity. Opening bell. There we go. So let's take something off there and take away the risk. So now costs are covered. First partial's been banked. I want to see the bodies close above those relative equal highs. I don't want to see how you can see the execution. I apologize. So now I want to see it run up into that 21,968. Again, that level was shared with the Telegram channel before the fact. I'll resume later next week, Wednesday of next week. I'll go back to going in the Telegram channel, calling minute by minute candlestick commentary, but it's hard to do that when you're married and you're on your anniversary, right? Okay, and this is the first presented fair value gap from the opening range. The difference is, you're probably wondering, let me take another partial off here. I want to raise the stop up. Because it's PPI, just like a CPI number, they can do a lot of head fakes. They can shoot this thing up and give me my limit alert and I'm done for the day. Or it can drop down and stop me out and force me to take additional entries to get that target. So I'm electing to be a little bit more conservative. I've taken 2 partials. Stop has been raised to half of the first percent fair value gap in the opening range. If it comes down and stops me out, then I'll have to reassess and see what I want to do. But I'm holding for 21,968 to deliver. The first percent fair value gap, the lower one, that's simply the first inefficiency after the PPI number. And then the opening range, first presented fair value gap, is noted here. I'm not so much interested in the 6:45 minute buy side and bounce, sell side efficiency from Wednesday's Asian session. So while it's on my chart right now, I'm more interested in seeing how the opening range, first presented fair value gap, I just got stopped out in the positive. It wasn't a loss. But I want to see how we respect that first presented fair value gap, which is the post PPI number. And we're also trading right now at the middle of, I'll show you the executions here. That right there is trading in the middle of the daily volume imbalance I showed you at the beginning of the video. So right there, I'm going long on that basis. And it's also based on, I'm inside of the first inefficiency after the PPI number. So I have two things going for me: higher time frame volume imbalance on the daily, and that first inefficiency or first presented fair value gap, buy side imbalance, sell side inefficiency after the PPI number released. So I'm building another position in here. And now I'm showing you the actual opening range gap. Okay, so now I'm only interested in seeing it stay in the upper half or using the high of that green box. So I'm still interested in going up into that 21,968. I believe this was just to wash out anyone that was long. I put a lot of people onto that 21,968, and I think that there's a lot of interest that was wanting to sell above that price. So that's why we had that big, rug pull dropping it down. So right now it's a little harder for them to want to be long. I'm long. I have risk in my stop right now, but I want to see how we trade above the opening range gap. I'm sorry, the opening range first presented fair value gap at the area we're trading in right now. I want to see it leave aggressively on the upside, and I want to see the bodies remain on the outside above it. So I just removed the risk in the trade. So I'll cover costs, put a little bit more pizza money in my pocket. Okay, so we've moved outside, but the bodies have stayed inside. So that's a little bit problematic. And I already know I'm likely to get stopped out on this one here, but I'll be more inclined to re-enter. Okay, so now I'm looking at that upper portion or upper quadrant of the opening range gap. And I'm looking at the range between that and the 21,968. And I'm trying to determine what position size I want to build on now. So I'll start with 3. I'm long there using the opening range gap high as a discount array. And now I want to put my stop loss below the upper quadrant, but also lower than the high of that first buy side and balance sell side efficiency or first presented fair value gap after the PPI number released. Now I'm watching the opening range gap. I'm sorry, the opening range first presented fair value gap, the upper blue box. And I'm interested in building longs at the low of that and also the high of the opening range gap in green. So in between those two levels, I'm real comfortable with adding and building it on that. Try to get a run up into that 21,968 level. I believe it can go higher into what I was suggesting in the shotgun Saturday, but I don't have the time to devote to babysitting it. So I'm going to have to just be diligent to work towards that 21,968 level. And I don't have any way of monitoring it because I'll be with my wife the whole day. So I have to do what I can do inside this short period of time, namely before 10:30. We were working in the consequent encroachment of the opening range first presented fair value gap. Again, that's just the full detailed name of the first presented fair value gap I teach you that can't be 9:30, but can be as early as 9:31 Eastern time. All right, so now we've moved a little bit further than I wanted to. I wanted to get one more tap into the opening range first presented fair value gap low. I wanted to add more to it, but it ran away without me. So I'm just going to have to babysit what I have here. Okay, raise the stop up. So now I have the stop at the middle or consequent encroachment of the first presented fair value gap that occurs between 9:31 and 10 o'clock, always Eastern time. Now, admittedly, I'm looking at this thinking that it should run aggressively up to 21,968 because it won't allow anyone to be on board because there's not going to be any significant retracements. So it'll run out a new higher high and then run to 21,968. That's what I'm expecting. Okay. I'm actually talking to Matt Miller, Trades by Matt, in text at this time. I'm telling him that that's what I think is going to happen here. Why is this guy Matt getting all the special treatment? Because he's a nice guy. I like him, and I can pick friends whoever I want to be friends with. So don't be judging. And that's what I was looking for. And I texted him. I said, just like that. But it falls short of the 21,968. And I want to take something off here, but it's only 3 contracts. So if it comes back down and trades into my PD arrays again, then I'll have to just resign myself to just simply take another trade. But if I can be honest with you, I wish I would taken at least 1 contract off when we made the higher high on the day. Okay, and now I'm thinking to myself, I'm going to take 2 off because I think it's going to run higher. Maybe it might run higher, and I'll keep 1 contract on and limit out with 2 and let it run and see how much juice I can get out of this lemon. Volatility today and this week has been off the charts, no pun intended. And that's not what I wanted to see, but it comes back and stops me in the positive again. So I'm looking at that. Okay, it was a sweep below the opening range gap, or opening range first percent fair value gap. So I'm going long on the basis of the high of the opening range or open range first percent fair value gap. And that right there is a good entry there using the high of it, that blue box. And that's even better there. So adding more rate consequent encroachment. I don't believe we're going to sweep the low of that again because we already colored outside the lines once before. That stopped me out. And now I'm just going to anticipate that run up into 21,968. Most individuals wouldn't see this market structure if I took everything off the chart and just had a naked chart. Nobody would really, in the retail space, would really feel comfortable going long here. And that's what makes the setup even stronger. Because knowing the draw on liquidity, they're just being really ruthless about not letting, because I put a lot of people on 21,968. So there's everybody that's long or has been paying attention to me, they all want to get out at that level or just above it. And that's why you're seeing this stuff. Oh, it sounds very narcissistic. Oh, it is what it is. Okay, I like where it's at here. And now I want to see it start breaking aggressively towards that 21,968. No significant drops from here. That's what's optimal or ideal. My eye is watching that recent wick high. I want to see how we gravitate towards that. If it's aggressive, then I'm going to want to move my stop loss and remove the risk because it's too close to my target. And I don't want to see a trade get close to my target and then come back and put me into a losing trade. That never should ever happen to any of you. All right, so we broke that. And it means the next rip higher would take us to the previous highest high of the day. And just above that is my target. So because we're in close proximity of those 2 specific price levels or particular prices, I'm not wanting to hold the risk. So now I'm putting myself in a situation where now I'm going to be able to profit handsomely. Even if I'm wrong, if it doesn't want to go up there, at least I'll come out with a nice dime or so. Now, all of these trades could be taken by someone that uses these prop funds and 15 contract maximum. And if that's the case, There's the limit order. I'll show you the executions. My wife just gave me the hairy eye, meaning I gotta get out of here. There's the executions, and that's a $33,000 day. Over 20 contracts, that's a retirement.